Good morning and welcome back to the Opportunistic Trader for October 30th, a Tuesday. Not much to say about myself for yesterday. I'm embarrassed. Did not have a good trading day. Cut losses early. Had a couple of losers. Tried to buy the market. I literally did not see yesterday. I'm actually kind of upset about it. Missed the entire move. That being said, we got to put it in the back of our mind, move on to the next trade, and hopefully today there will be some good ones. Yesterday's S&P range was actually 100 points. The NASDAQ was somewhere around 300 points. Interestingly enough, the thing that let us down yesterday was the VIX, because it never expanded until we made that low later in the day, and the VIX got up to like 28, almost 29, and then they slammed it on the close like 3 points or over 10% on the 50-point reversal at the very end of the day. The market was teetering on the brink of a major problem.
Larry, I think the vol curve actually flattened too yesterday, taking it to another level, which is, whatever. I just thought that was relevant too.
Yeah, I think so. But I don't understand.
I mean, at the end of the day, I didn't see that coming either, just for the record.
I didn't see it from the opening. I thought it was you were able to buy dips. And today, basically I've gotten a bunch of calls, from people in the community, and everybody is in the same mantra: you got to buy the market. So, I don't know if that's going to be the case today. I mean, it's starting out that way. It's up 13. 13 is like the old 3. So it's really
right.
it's not up too much. They could wipe that in a second. This is not a good opening for the market on the bullish side. I would have liked to see it down. None of the big cap stocks are really bouncing. I mean, Facebook is at 142.58. It's only up 50 cents. It did bounce a couple of bucks. Apple is the sickest, because Apple traded down to 206 yesterday, closed the day at 212, rallied $6. This thing is like an internet stock. It's moving percents 3, 5, 2 every single day. So it's a great trader. Amazon is the busted vehicle. Bad longs in there. Stock probably has more to go on the downside, but what I want to point out is the stocks that we're talking about, Apple per se, is up 30% for the year. Netflix up 40, 50% for the year, maybe more. Amazon up 30, 40% for the year. These stocks, Google's not up, okay, but all these other names are up. They're up a lot. And, granted, they've come in a lot, which they have. They're still up a lot. So, if Amazon traded 1,200, it would still be up on the year. So these are things that I'm looking at. There were brief bounces in Asia. Markets there are still under pressure. We're outperforming. Same mantras all year long. The S&P is down less than 1%, and it feels like the market is blown up. People are, zombies walking around the streets, not knowing where their losses are. But what's interesting is today is the day before month end. So usually, traditionally, they try to buy the market to save the market. The problem is we're down so much this month, a 10 spot, that they're not going to be able to do much damage. Even if the market rallies 1% or 2, it's still down 7.
Right.
There's nowhere to hide. Straddles are elevated. That's the wrong one. The 5 straddle days to go. $40. So, and $40 is nothing. The bottom line is, that's what we moved in the last 15 minutes of the day. So we'll have to see how that goes. But again, this isn't a great opening. I was surprised yesterday. Dollar is strong again today, slightly. And it's the same mantra. I don't see much outside of that except, the pain trade is on. NASDAQ, since we just got on the air, is collapsing. It's only up 24. It was up like 40 a minute ago. So markets, it looks like the same mantra. They're going to buy these defensive stocks. Potentially Dow will outperform, and NASDAQ is under some pressure. So same mantra. I know before we got on the air, you talked about Apple, that you had some information. So I'm interested for you to parse out that information to our membership.
Thanks, Larry. One is I think it's important to note that many people that are giving advice or making comments on the market are saying things like there is nowhere to hide. But here we're going to put some meat on that bone, and by that, there's nowhere to hide. And that type of a phrase from us, here's what it means. It means, translated so that you really can think about this, and actually plays right into the Apple concept. Why Apple is, number one, a great stock to trade, and will continue to be a great stock to trade. And number two, why there really is nowhere to hide. All right, number one, Apple is a FANG stock. It's the other A in the FANG. But as Larry just said, it's behaving like an internet stock. But the fact of the matter is, Apple has two personalities, and that's why it's good to trade. And it's also why there's nowhere left to hide. Apple is treated like a tech stock. Sometimes it gets hammered with the other FANGs. But in reality, Apple is a flight to safety, put it in quotes, stock. And by that, I mean, if you're going to rotate out of every other NASDAQ stock and put it into one stock, you're going to put it into Apple, because it's a positive cash flow stock, because it's an established industry business stock compared to Netflix. So this bipolar behavior of Apple, I think, makes it great for trading. Also explains why there is nowhere to hide, because even Apple's a bellwether now, people. Apple's a stock that has positive cash flow, billions and billions of dollars offshore, and Netflix has, billions of cash burn, negative cash flow. So what you'll see with Apple, which makes for great day trading and verifies the no place to hide concept, is this. Oh, tech stocks are down. Sell Apple. Sell Apple because it's in an index with tech stocks. And then other people say, well, crap, I should be, excuse my language, Apple's really not an internet stock. Why are we selling that? We should be buying that because it's something that can throw off a dividend. It's something that can buy these other companies if they get cheaper. So for me, Apple is taking a new important focus for my system trading, because it is so whippy. And yeah, it's up. What did you say? How much for the year?
I think it's up over 25.
Yeah. So folks, Apple is a Dow stock. Apple is the IBM of 20 years ago. It is the GE of 20 years ago. Flight to safety means flight to Apple. And the fund managers are already so long Apple. How many more can buy it? So that's going to make it kind of, I think, really bipolar and whippy. And
well, they got earnings also on they got earnings on the 1st. So that'll change the complexion of everything going
Agreed.
on. Apple's up 25% for the year, but they could wipe that in one earnings. I'm telling you.
No, I'm not disagreeing with you on that. I'm not, for example, eBay has earnings today, right? eBay's earnings could come out. I think it's today. I put it in the chat. I forget. I was like, I was a zombie putting it down myself, putting earnings in myself. But Netflix could have earnings, or eBay could have earnings, and that'll drop Apple. But should it? Apple should drop because of Apple now. I'm just saying it just makes for good trading.
Yeah, Apple's a great trading stock. Straddles are bid. The market here is the NASDAQ is not going to make the opening. It's now only up 16. When I mean not make the opening, it's not going to be very much positive on the opening. But the mantra is in place here. The S&P is holding up better than the technology. I think they're taking a lot of the speculation out. I'm looking at stocks. Netflix is now lower. Amazon is down 17, almost 18. Now it's down 19. I was watching that thing trade yesterday. I got to tell you, I don't know how anyone trades it. It moves. I was talking to Mike. I'm like, Amazon's down 3, and then I look up, it's down 13. Then it's down 1, and then it's down 14. Then it's down 3. I mean, it's like trading in $10 increments, and I think I mean, it's hindsight behind the fact that we dropped 10%, but you know, the bull market is definitely over. I know it sounds crazy, but I just, what we were talking about 3 months ago took 3 months to come to play. Higher
Right?
interest rates, higher VIX, stocks that are in a bubble, every one of these FANG names. And the thing
And
is,
paraphrasing you, Larry, how could this keep the incredulity that we had for 3 months? I would say stocks are going down, and you're like, yeah, but they're not. When's it going to happen? Because everything in the world was falling apart, and nothing's going to happen to us. Well, it's finally happening.
yeah,
I mean,
hey, but the puts aren't bid. It's interesting. It's funny. The put prices, I'm looking at them from yesterday, are cut in half on the out of the money puts. So
what about? I just want to throw this out there as an idea. Not, I'd have to look closer at it. It's been my experience that as you go to an end of the month and you don't see those short-term options bid anymore, uh, uh, you might see a curve flattening. That might be an indicator of people rolling their hedges to the next month before they get fired. I don't know. Just something to consider.
well, I don't
If
know
the if,
if they, to really look at it. I don't think they look at that anymore because now we have options 3 days a week. Back in the day, you're right. If you had July on, you'd lose your July to the August, and you'd have
right,
to roll. But now, I could trade today. For Wednesday, Friday, Monday, Wednesday, and Friday of next week, month end,
right,
which happens to fall on a Wednesday.
right.
There are some weeks you could have 4 expirations in a week. So
Which actually represses volatility and just makes gamma more important to everyone, right? You know what I mean in terms of the VIX term structure.
I just don't know why the
They don't want
market
to spend
is.
money, so they'll rather spend $40 for a 1 day straddle than $80 for an 8 month straddle. You know what I mean? It's kind of like buying loose cigarettes because you can't afford a pack.
It's
These guys
just.
don't have any money to spend.
I mean, this is just shocking. I mean, the 55 straddle is down $6 today, with the future up 10. So that's pretty big. Um, Straddle pricing is down about $7. Uh, the market's not moving. The Nasdaq is heavier now. Amazon's going to break 1,500. It's funny. I was with a bunch of traders yesterday, and we were talking about it breaking 1,600. Well, it did that, and now it's breaking 1,500. So you know there's a lot of pain out there. And it's funny, the market cap of Amazon right now is going to go under $700 billion. It hit $1 trillion for literally one day. One day it was $1 trillion. That was it. And then it just dropped a third of its value in a month or less. So
And
there's.
this all started on the Amazon side with Amazon and Facebook, like antitrust concepts, right? They hit $1 trillion. Someone made an antitrust comment. You started seeing sell-offs, Google, Amazon, and then earnings expectations were lowered. And then someone said, "Oh, trade wars are important too." And now everything matters. All of a sudden, everything matters. Let's see how long that lasts, though.
That brings me to a great point from yesterday. It was funny. We were trading, and then we sold off 30 SPU points, and they were coming out with news that Trump was putting another 238 or whatever number. They came up with
Right.
an obscure number on China again, but he never even put the 500 on. I mean, I'm involved in a business. We make goods in China. We're not tariffed. I mean, I don't even know what is being tariffed.
Right.
So
Well, I think just tape watching, just looking at things the way you do, the Nasdaq opened strong. I'm sorry, the Nasdaq was weak while the S&P was strong, and by midday the S&P had come off its highs but was still positive, and then this statement comes out by the White House, by Trump, that yeah, we'll levy more tariffs if we don't have an agreement by mid-November, whenever their
I
G20
don't
meeting
know.
is.
I don't know if that came out of the White House, actually. It might, because the White House flatly denied it before the close that they said anything. So,
Oh, really? I
yeah,
didn't see that part.
yeah,
I
no, it
just
didn't come
watched
out of the
the
White House. It
uh,
came from
I
Bloomberg, I
watched the
think.
timing of things,
It came from Bloomberg. But it's amazing that, a headline like that, could move the market, and it's not even a real headline.
I wonder if that bounce, we saw that big significant bounce yesterday from like 2602 or '03, whatever the low was. I mean, it basically did 40 points really quickly. I wonder if
yep,
maybe that was part of that denial. I don't know.
that's a good point.
Yeah,
That's a good point.
I don't know.
So now it can go down for the right reasons.
But I want to, look. I think they're killing people here. I just think they're killing. The bottom line is, look at Tilray. The thing traded 300. It's $89.
You would think their product would be more in demand in a bear market.
Yeah,
kind of like cigarettes.
But again, it's the same.
Dude, I had a bad day. Let me go buy a fifth of bourbon. No, I think I'll just buy some Tilray product.
Yeah, but there's so many, and anybody could. It's like, it's weed. People are growing this stuff in the ground. It's not like a cure for a disease. It's completely overvalued. I want to point out that General Electric, one of the bellwether stocks in history of the market, is trading on an all-time low of it's not an all-time low. A low of this move of $10.78. The all-time low was $3 or $4 in '08. The market cap of the stock is not over 100 billion anymore, and it's shocking that the stock is in the 10 handle. So
I have the chart. I'm going to throw into the chat room. Their dividend has gotten destroyed this year, adjusted for inflation. It's amazing. That must be one of the drivers contributing.
Well, they don't. They've sold off all their companies. They have nothing left. They're expecting this guy to turn the whole company around, which he will. I think this could be one of the best investments in the next 5 years, is this stock. But you got to sit through a lot of pain and suffering. The Nasdaq is just terrible. I mean, it's just about to go negative. It's only up 850. Again, I don't even know why it's up. Google's down 3. Amazon's down 24. Netflix is down 2. Apple is now red, just ticking red. This thing should be down 50. I don't know why it's up. I don't know why the SPOOs are up. But somehow someone wants to buy this opening. It's been, it's interesting out there, just to say that. There's more to come. Again, they rallied them $40 quickly off the bottom. Straddles look too cheap for 2 days. They're actually catching a bid as we speak. They're now $42. The straddle is only down $4 today. And the market hasn't started trading. So the Nasdaq is holding on, bouncing around, up 5. The S&P is up 8.25. Same mantra as yesterday. The S&P is outperforming, but it makes sense. I mean, the S&P is down on the year. The Nasdaq is up. They got to get everything in line. So, but these Nasdaq stocks, this Amazon, I think the low yesterday was 1485. I mean, that's in jeopardy for sure off the opening. They're buying bank stocks again. They're buying some safety. Today could be a good trading day.
So, Larry, what sort of signals are you going to be looking at most closely? Is there certain sectors or VIX, or is it Europe?
Same stuff. Same stuff. VIX, although it's not working. We used to look at oil. That obviously.
Wait, Larry, it didn't work for one day. That's the point of active trading.
No, I know. But
actually,
once they get off
before you beat yourself up, seriously, I mean, that's part of active trading. You have to see
Of course. I mean,
always
I'm
are
looking at it.
changing what is important.
I just don't like the Q. It gave me a really bad read yesterday, and that bad read cost me one of the better trading days of the year. And I am gonna watch it, but I'm gonna stay away from it. Can't really look at Europe. those markets are slightly lower. The NASDAQ just ticked negative for a second. Now it's back up 3. Launch protection team is trying to save it. It's interesting, though, that Trump hasn't mentioned the stock market in months and months and months and months. Don't worry. In about another 5%, he's going to blame Powell.
No, he came out this morning.
That's the interesting thing. Like, if you take a look at the global indices, it's a really horrible year right now. And if you take out the FAANG names that really crushed us yesterday, but if you take out Apple, Netflix, Amazon, Microsoft, it's a really bad year. The performance of these global markets, I'm going to start taking a look back at 3-year charts of a lot of these names, whether it be 3M, Caterpillar, a whole basket of names. It's not great performance.
Wait. As speak of the devil, this morning, a couple minutes ago, Donald J. Trump, the stock market, listen to how the stock market is tied into the midterms. He does that. This is a getting out the vote tweet, but it's relevant because the market is moving on midterm
he did make a comment
elections.
on the market?
The stock market is up massively since the election, but is now taking a little pause. I'm quoting here. People want to see what happens with the midterms. If you want your stocks to go down, I strongly suggest voting Democrat. They like the Venezuela financial model, high taxes and open borders.
That's what he just came out with.
Quote, if you want your stocks to go down, I strongly suggest voting Democrat. That's his
there's just nothing sexy about how he does it, and that's sad for social and cultural reasons, but he's just telling it like it is. Hey, our stock markets are down. We know whose fault that is. That's Powell's fault. But you know what? We're doing better than the rest of the world. So if you want it to keep staying that way, keep Republicans in office. Otherwise, you may as well go with the socialist, communist, whatever, blah, 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 that he's using. I mean, he's just coming right out and saying it, man.
Did he really? That just came out? It's so freaking ironic. I just said he hasn't made a comment. It's shocking.
Exactly. But he's I mean, I want to say this as a trader, not as a social commentary. Donald, for years, I've known this from working with people that have worked with him. He will pivot the news off of bad news. He'll keep himself in the headline, and he'll pivot off of bad news by making an announcement about something else, kind of a redirect. You have a 2-year-old. Anyone with a 2-year-old baby understands this. Your kid is walking near the electrical outlet, and you'll say, "Oh, look at the bird out the window." So he's pivoting away from the tragedy in Pittsburgh, or the failure of this, or the complexity of that, and he's getting the markets to refocus on him and the election. And to me, that takeaway for me is if the Republicans hold or gain seats, you will see a relief rally. I'm not saying you're supposed to, but you will, because people will use that as their mantra. So.
Yeah. Well, I think that's the key for the next, he's campaigning right now. Every tweet that he sends out, everything is, trying to get more of his, the people that he wants in office. That's, everything talking about the markets, talking about this, that, everything is positioning for the next 7 days. So that's kind of the environment that we're in. But I spoke with Tony yesterday, and I kind of asked him, and he didn't really give much of an answer on it, but I just, forgetting of who you're voting for, left, right, whatever, it's more of what do you think is positioned in the market? What do you think the market is positioned for at the moment? And do you think there's going to be a large reaction on Tuesday, or I should say Tuesday night, Wednesday, based on what actually occurs either way?
Oh, yeah, there's going to be a huge reaction. If he loses everything, which is what's going to happen, because the guy is going to lose it all, it's going to be, and he's going to be angry. And as a market investor, when you get a tweet like that, what do you think's going to happen the day he loses? He's going to throw the towel in. He'll be like, "You caused this. You voted Democrat. We're going to, the market will drop 10%, and he'll just blame, the election." So the bottom line is, it's, we're in an interesting spot. That's all I'll say. But trading should be good. NASDAQ just went down 30, 40 points since we've been on the air. I was looking at it. I said it. I couldn't understand how the market was up. Amazon is now down 35, on the way to down another 100 or 50 or whatever they're going to do today, these maniacs. We got Facebook's earnings today. Stocks 140, 150. I think it traded down to 139 and some change yesterday. If we get into the 120 handles, it's given up 2 or 3 years of gains, which I think is quite possible. Markets are, they're trading around right here, and it should be interesting, overall to watch the trading today and participate. It should be a highly active day. This is not, again, a great opening for the market, but we'll see. We'll see what happens. We probably need a test to the downside, and then we'll see. Oh, Nasdaq just bounced, so S&P is bouncing. Nasdaq's only down 6 now. Some of these stocks are bouncing. Apple's down $1, ticking lower. I can't believe how much they rallied Apple yesterday. I mean, it literally rallied $6 in 15 minutes. This is the market that we're
The
in.
last hour candle is a very long wick below. As an active trade, if I could just throw this out there,
Sure.
Low, medium, high conviction. Yesterday on the hourly chart, there was a signal to get short. However, it was a bad risk reward, so it wouldn't be something that I would put on. However, if the market fails to maintain above 213.81, and it's not coming in above there, but if it fails to get above 213.81, it's a sale. Another way to look at it is if you could sell it now, you could sell it with a stop at 213.81, or you could sell it if it goes back above there and back through 213.80 with a 216.80 stop. That's on my radar for stocks today. Something I'll be looking at closely.
All right. Just trying to look around the board. I don't see much. Oil is tanking. I guess they're going to be month-end marking to the short side. The COT data was basically saying that the market turned from long to short, I think, and that market acts terrible. That's near the monthly low. I think the monthly low was in the 65.80 area. We're closing in on that. You'll probably see some stops. That can't be good for the general market. That being said, it's kind of a quiet start to the morning. Yesterday was, it was unbelievable. Yesterday was an unbelievable day. These numbers that are going to come out this month are going to be not good. Not good. So,
well, can you really afford to goose the market on the end of the month for window dressing when you have redemptions coming in on November 1st?
No, you got to be a net seller, and I think they are. I think there are net sellers all over the place. But the market is, interesting at these levels. This is a little bit better opening. If you want to look at the long side, you want to buy in, S&P not here, but a little bit lower potentially if you're looking for the long side or a bounce. I would be careful for 10:30 margin selling and 15. See if there's any stops. Yesterday's rally was amazing. I sat through it. I watched it, and we were freaking out. Like there was no bid, and then all of a sudden there was a bid, and then it went from 03 to 13 to 23 to 33 to 43 to 53, and we settled in, at that point. But we rallied 40 handles.
Right.
So
Shy Girl, not to interrupt, but Shy Girl is throwing in the chat. Apparently, Trump is not done tweeting, which is economically relevant.
What's he tweeting now?
Well, I'm actually in the chat room.
Put on his analyst hat.
If the Fed backs off and starts talking a little more dovish, I think we're going to be right back to our 2,800 to 2,900 target range that we've had for the S&P 500. Scott Wren, Wells Fargo. So he is now become a cheerleader. He found an analyst who's bullish, quoted him, and tweeted him. And thank you, Tracy, for that. Yes,
Right.
he's
Is that what you see on Trump's Twitter? He's quoting an analyst.
yes,
This is
yes.
the
And the way
president of
this
the
is being
United
typed,
States.
this isn't him doing this. There's not enough. There's no caps. But the tweets are designed, like you said, to get out the base, and was yeah, the tweets are designed to get out the base, and those are things I'd expect Kudlow to say on CNBC. Those are not things I expect the president to say.
Nah, the president
If the
has
market doesn't rally
actually
now, you know whose fault it is now? It's Scott
his.
Ren's.
No, but that is kind of what he is trying to push the narrative of over the past few weeks. It's either the Fed's fault or it's the Democrats' fault. But things are going great. But that's that's the narrative he's trying to push. It's the Fed.
But he's going to
it's the biggest
lose.
enemy,
Do you understand? I'm telling you, he's not going to have control of both. That is just a guarantee. So what's he going to do then? He's done.
But there's always event risk. Look, between the East and West Coast, I'm just going to throw this out there just to be devil's advocate. Between the East and West Coast, we're having our conversation, but between the East and West Coast, that whole Midwest might be, even though, they might be focused on this. A caravan of immigrants is coming, and this is stock market related. What I'm saying, a caravan of immigrants is coming, and Trump is putting troops on the border. That makes me like Trump. Number two, I do believe it's Powell's fault. He's raising into a recession. That's possible, right? Okay. And then number three, the middle America voters are looking at the comments about well, in general, get out the vote. So basically, like, look at his last tweet. It's all about we're going to protect you. I mean, his tweet literally says it. We're going to basically says they like the Venezuelan model, high taxes and open borders, which basically says I'm going to lower taxes again, or they're going to raise taxes, and I'm going to make sure people don't get through our borders. I'm just saying that I'm with you, Larry, but when the curtain is pulled, I don't know. All it takes is an event.
But why is he
Like,
talking about the Fed? Like, what benefit? Listen to me.
oh, that's
What
obvious benefit.
What?
That's obvious
That
benefit. He's trying to just get the blame off himself. Every president wants to take credit for an expansion or a higher stock market, but not take the blame for a lower stock
But
market.
no one's ever. Obama never mentioned the stock market. I think he mentioned the stock market once in 8 years.
Well,
Okay,
that's true.
maybe.
Obama would say things like he would take credit for the economic recovery. Whether he did deserve it or not is remains to be seen. But Trump will come in and say the stock market is up, and you can thank the GOP and me for that. And when the stock market is down, see, that's why presidents historically like to focus on the economy, because the stock market moves in volatile fashion. He said the stock market is up. And took credit for it. And before we started tanking, he's like, I think this is why he's brilliant. I think Powell is being too aggressive with interest rates. And then we started dropping. And I'm just saying, if the market is starting to discount a Democratic land grab in the midterms, you could have a rip higher if the Republicans hold their own. And the Republicans could hold their own because I don't really think a lot of people are looking at it in the Midwest the way we are. And that's because they don't listen to any news anymore, because they've been dissuaded because of a lot of the fakeness involved. Does that make sense? I'm just saying I'm scared of a rally higher after the election, if I'm short.
I mean, I don't know.
That's my black swan. Put it that way.
Yeah, I don't know. I don't really. I don't know. I just shock today. Today I'm in shock. I mean, the guy is quoting an analyst who he doesn't even know. Maybe he knows.
Yeah,
Maybe he's
that's
friends
in the
with him.
what room is that? That's the newsroom.
It's also interesting, just in general, this has been the theme for the past 3 weeks, but not many markets are. It's really equity centric, this entire move. It's not, gold has popped a little bit. I mean, we're up $15 in gold over the last 2 weeks. That's nothing. Crude has dropped a few percent. Fixed income, the 10-year right now is 3.11. It didn't do a whole lot yesterday. Yields remained higher throughout the entire move yesterday. FX is doing nothing, just grinding higher in the dollar. So it's really an equity-centric move. Yesterday was heavy tech selling. We had a few interesting sectors higher, like financials were higher yesterday. It's not often you see a significant volatility like that, and you get financials higher. And so it was really more of a rotation yesterday, and so it'll be interesting to keep an eye on the sectors individually. Like Larry was pointing out, NASDAQ has probably dropped NASDAQ futures have probably dropped 60 points in the past hour, while the S&P's dropped a few points. Amazon definitely, everybody needs to keep an eye on that, below 15 right here. But it'll be keep an eye on the individual sectors.
Yeah, I don't listen. Does it really? I mean, the truth, other than the people that are long it, does it really matter to anyone? Like where Amazon. You know what I'm saying? It's like it's
absolutely not. Yeah,
it's still up. Listen to me. You go open your statement, and on the year, you're up 20%, 23% in Amazon. Okay, so everybody's crying, but they're up 25%. What's wrong with that?
The mantra of where, if you were long day one, but let's say you bought.
Well, it's only 1 year, Mike.
Goes
if
back
you go
to
back,
if
the
you
stock
bought it in
was
June or May.
The stock was a $10 name. It was actually $1. Okay, so I mean, what do you mean? We're just looking at the year. Okay, so on just the year, yeah, if you bought it up 30%, then you got to pay the piper. But overall, I don't know. I mean, is it really that bad for these people? But
no, of course not. It's performing tremendously. But
right.
If you go back, if you bought it any time after May, or actually even before that, let's go back to February, you're down money now.
100%. And the funny thing is, nothing is a free. Nothing is, what do they say? A free lunch. They thought this was free money. Kind of in a way reminds me of Bitcoin. It's like, what's going on in that? That thing hasn't moved. I think if you mention the word Bitcoin, you get killed now. A year ago, it was the greatest thing ever. The CME was rushing to list the product. So all of that being said, things have changed a bit here. I kind of like the opening for trade. Better here than where it was. I woke up this morning, the S&P was trading above 60. It's come in 18 handles, which is nice. Keep an eye. I guess the Q today, believe it or not, is Amazon. Keep an eye on Amazon. Keep an eye on Apple's not down too much, but keep an eye on Netflix and Amazon. Mike was pointing out on earnings, Netflix was over $400 a share. So, keep an eye on that.
On that note, it'll be interesting today to speak with Tom McEntee. That Netflix move really is pretty interesting. And it is still up 50 or 44% right now year to date, but it traded 405. And here we are a week later, and it's at 278. So,
I'm sorry to interrupt.
No, I was just going to say, we're speaking with Tom McEntee today again at 1 o'clock. And, he's been good. It's a lot of fun speaking to him. He's getting us ready for the earnings reports, looking at options and really good risk-reward opportunities. So he's coming on at 1 o'clock. And look, with all this volatility, it highlights the earnings even more. Like Facebook's the big name after the bell today. That name, if it's ugly numbers, it's, going to be magnified to the downside. And look, at the same time, if it's a good number, we'll be back to where we were trading like 4 days ago. So it's amazing how the mantra changes. But, we'll be looking at a lot of different names. Tom's got a lot of different names on the radar. 10 o'clock, we're going to be speaking with Phil Flynn about all the global markets. And then 11 o'clock, we're going to be speaking with Steve Barrons, who's an author and trader. He educates people in the market, and it'll be interesting to speak with him. What we're going to be speaking with him about is he's interviewed tons of very successful traders. Going to be speaking to him about what he speaks to them about, the different findings from just consistently speaking to a lot of different traders, both the best in the world to a lot of novice traders that he speaks with at his university. So we'll be speaking about that amongst many other topics. That'll be at 11. And then with this volatility, you're going to have Larry pinned to the seat all day long. So we'll have a lot of Larry's voice.
Interesting, as you were parsing that stuff out, the NASDAQ made a lower low, took out the low of this morning. S&P is down a couple, trying to hold in. I kind of like it for a trade. again, but everything's Amazon. I mean, that stock is actually broken. As we used to say on the floor, that thing is broken. But I laughed when you were talking about Tommy Mack, and I know he was putting on a lot of positions in Netflix into the earnings, and it was funny. We were talking about the upside. We were all worried about the upside because it blew through his top strikes, and then now it's like the whole position is like off the board. It's not even reality. So already the S&P's had a 20 handle range. NASDAQ looks god awful. I mean, god awful. It's just, it can't catch a bid. It was up 40 when I walked in. Now it's down 50 or 44. The S&P was up 21 when I walked in. It's now down 275. What else do we got? Let's look at
it's interesting. We could almost have two interesting segments. Mark Fisher always talks about there's a really good deli right across the street. If we were to go around lunchtime and just start talking to people, are people talking about the markets? What
Not
stocks
yet.
are they talking about? Things like that.
Man on the street, that type of stuff.
It's also interesting. On that same sort of note, on Thursday night, I'm going to a South Florida hedge fund reception. And it'll be interesting just to kind of get a gauge of what people were talking about, thoughts. I was there a month ago, nobody was really positioning for this. And so it'll be interesting to just talk to people, talk about ideas.
They might not be serving food. They might have taken food off the menu. It'll be drinks only. Anyway, I mean, NASDAQ is just, I just keep refreshing the page and it's going lower and lower and lower. And but I do think this is a much better opening to look to the long side for a trade. So that being said, we'll see what kind of pain and damage come out of the market right here, right now. And that's sort of it. So we're S&P is actually tanking as we speak. NASDAQ is now down 45, S&P down 5, 48, 50 in NASDAQ. And you say 70.
Now, Larry, I know it's a little later on, but you always talk about how there are all these option expirations Monday, Wednesday, Friday, month end, things of that nature. Today does not have an option expiration. Do you think that that'll play a big role as we approach the last few hours of the day?
I don't think so. I mean, there won't be as much, strike risk. But overall, I mean, I'm watching this market. I can't even believe how fast the NASDAQ is moving. I mean, it's awesome. I mean, it was funny. Most people took shorts home overnight in NASDAQ, and this morning they were crying, and now they're celebrating. So, that's the difference in a couple of hours, or in this case, less than an hour. This is all Amazon.
30 handles in 10 minutes on the NASDAQ.
Oh, listen, the NASDAQ just traded down 65. It was up 35 when I walked in. It's traded... The range on the NASDAQ today is already 120, which is nothing because yesterday was 300.
Right.
So computers are blown up. Markets are blown up. This is a better buy area if you're looking to buy. And, but there is no bid. I mean, I'm looking at my tape. There hasn't been a bid since we started here. NASDAQ now taking out the low, S&P taking out the low. It's
by the way, guys, this is relevant. If I don't know why, but the market is selling off at the same time the dollar is, and the 10-year yield is rallying. So the dollar is giving back a lot of its gains, but more importantly, the 10-year yield it's only off a couple points, but not points. I mean, the 10-year yield is only off from 312 to 310, but this is people buying bonds because they think it's safer than stocks. This is
what do you
crazy.
mean? Bonds are down. Everything on the board is down. They just hit.
I'm looking at the hour right now. I see bonds for this hour. I'm just saying this hour they started moving. The yield started coming in again.
Yeah, but they're still down. You can't even hide in them. They're down 15 ticks on the day. They're crushed. And oil is down on the low tick of the move. I mean, it's crashing.
I'm just saying that for this
being
hour,
said,
but this sell-off, this hour, the market is selling off for whatever reason right now. And the bond market, having already been crushed, catches a tiny bit of people running into it for safety. And there is no place to hide. That's why I brought it up. The bond market is having a little bit of a dead cat bounce. while the stock market is having, a dead cat trample. That's all I'm
I
saying.
mean, the
There's no place to
S&P.
hide.
I mean, the Nasdaq
Nasdaq's
is
dropped about 100 points.
the
on
Nasdaq
this
is
call.
lower every tick. I'm looking at this thing. It's
Well,
insane.
Amazon's taken at yesterday's low, or right at yesterday's low.
I mean, this is an amazing move so far. So look at it; it keeps going.
No, it definitely took out yesterday's low. Yesterday's low was more like 90-ish or something.
Oh, was it? I thought I got that 85. Yeah, so we're through the lows. Everything is crashing. SPOs are crashing. Everything is crashing. It's funny. We were very calm, up 20 handles. But this is a better opening. So we'll see. We'll see where we are. This hour went very quick. S&P's tanking, making a new low. Nasdaq down 70. S&P down 9, crashing. There should be some trading in here, but again, I don't know what positions are. It's not looking pretty. So we'll stay on our toes, and we'll be back to you guys shortly with some more commentary. But got to get ready for the opening. Nasdaq down 73, crashing. This is not where it will end. It's either going to end up 200 or down 200, but it's not ending here.
I mean, we had yesterday. It was 100-point range in the S&P. I think it was over 400 points in the Nasdaq. So it's a lot of volatility.
Yeah. So there'll be good trading. I like this opening much better than the other opening up, higher. I think we could make a bottom off this opening. So be leery. It's now basically 15 minutes to the opening, a little less. I'm going to get off. If anybody has a closing comment, Vince or Mike, feel free.
Just the members, if you have any questions, put them in the Q&A tab, and we're going to be on throughout the day, and we're also replying to questions. So if you have any questions, most basic to the most advanced, put them in there. Happy to respond. We got a team of people ready to help out.
All right, thanks guys.